Afternoon, everybody. It's a little after 2:30, and while I said I was not going to do any closing comments, I wanted to make a comment today now because of the amount of information that has come out and the effect that it's having. First of all, um, the 39 billion auction of the 10-year notes got a D from Rick Santelli, and frankly, he said it was deplorable, and giving it a D was probably giving it benefit of the doubt. The CPI numbers continue strong, and I have to fall back on one very particular set of circumstances, and that is anybody who shops in a grocery store has to fill up the car with gas, has to pay rent and utilities, has known for months that things are clearly not better. I'm going to fall back on my five-word explanation of this market, and that is it's an election year, stupid. I mean, there's nothing else to say. I would always take the, not the advice of, but the observation of, the experience of the many versus any number of experts. The experts are ivory tower assholes who don't go shopping, don't pay rent, don't worry about electricity or gas or whatever it is that they require for their life. And so I think that that's just ridiculous. So the auction, prior to the auction, the when issued market, which is usually a very strong indication of how the auction is going to go, we're trading at about 4.51. When the auction ended, they jumped up to 4.56. The chart on the screen is the 30-year. I mean, I can easily change that to the 10-year, and I will. But the 30-year is what I usually quote as far as the direction of the market because it is the long end of the market. The 10-year is even more extreme to the downside than what we've seen in the 30-year. We've broken all of the lows going back now. This is a daily. So, you know, the last time we were at this level was in November. A look at the weekly shows the extent of the break. We rolled over. I've been talking about this for a while, and I've also been talking about the fact that it would not surprise me at all to see a rate hike versus um, the rate cuts. We've gone from 6 to 4 to 2 to maybe we won't get any. Now, the FOMC minutes came out at 2 o'clock, and basically they said nothing. They basically said, we're hoping that there are some seasonalities to what's going on in January and February with the economy. Again, they were wrong. So, I just wanted to put this out and give you a little bit of an overview. The market is currently down 517 in the Dow, 180 in the NASDAQ, 58 and change in the S&P. Those are all about between 1.1 and 1.32. However, the Russell, which is made up of companies that actually have to borrow money at inflated rates because they're not the large caps that can issue bonds or can borrow money doing a secondary. Um, this group is down 3%. 2018.56 down 62.17 or 2.99%, and the transports are right behind it, down 381.57, down 2.4%. The only good news today was Delta Airlines with a minor miss on revenues, but a beat on earnings. I mentioned that this morning in my pre-opening comment. That stock had a recent high of 49.19. It closed yesterday at 47.32, and today had a new high, not by much, 49.24, and then collapsed down to 45.92, and um, from being up pretty nicely to being down now $1.22 at 46.10. So up 4% to down 2.5% on the day. Um, I'll put out my daily note tonight, but tomorrow we have more news coming. We have the PPI. And besides the PPI, we also have uh, Thursday is a claims day. So we have initial claims, we have continuing claims, and nat gas inventories. And on Friday, we have import prices and export prices and the University of Michigan consumer sentiment. So, this is a tough market, but you have to listen to your common sense. You can't listen to all of these teleprompter reading jackasses who, you know, get paid to be cheerleaders for the market. Have a good day. I will talk to you tomorrow.